I have a student loan that I'm paying on, and what I want to know is what to do with overpayment. So they've been sending me these emails asking me if I should use my overpayment to, I don't know in what way these two things are different. On the one hand, I could use overpayment to push out my next due date so that I don't have to make payments, even though I make them consistently. The due date would be extended to some point in the future, or I would just pay down the principal, but the next month the same amount would be due. So I don't know if there's a difference between those two, but that's kind of the situation that I'm in.
Okay.
If
Husan, I'd like to understand your situation a little better. So you have a payment that you could make next month, or you could do what?
it's about how to apply the payment, I guess the options that my student loan provider are giving me is if I pay, let's say, $25 over what I'm supposed to pay,
Hmm.
they can apply that to next month's payment so that technically I would owe $25 less. Or it would just pay the $25, but next month the same amount would be due. I
Okay.
make the same overpayment every time, so I'm getting into the habit of paying far enough ahead. So I see an advantage of having the payments applied to future payments, but I don't know if they're actually driving down the principal or
Okay.
if they're
I
just
got you.
holding. Yeah.
I got you. So here's what's happening. When you're talking to the folks online, please don't assume they understand how loans work. That's number one, because they don't. All right. So here's what's going on. Anytime you pay extra or a prepayment, that money goes to principal and it saves you interest. But if you have more than one student loan, you want to know which loan to apply it to and how much money to pay so that you know exactly how much money you're saving in interest. So here's what I know. When you go buy something, all right, and let's say you're going to Amazon and you're buying something from Amazon, you give them $100 and you want what you paid for with your $100, correct?
Correct.
So when you give the student loan extra money, you know what you're buying? You're buying interest savings and you're buying time savings with your extra money, correct?
That's right.
But are they telling you how much that is? And do you even ask them how much you just saved? How much did you just buy?
No, what
Yes.
I am kind of looking at my transaction history and I
Mhm.
see how they're applying it, but I'm not directing them to apply it in a certain manner.
Right. And see, the reason why, if your student loans were 0% interest, would there be any financial benefit in paying extra?
No.
No. So the reason why you're paying off the loan is not to pay it off faster. The reason why you're paying off the loan is to pay it off cheaper.
Right.
Okay. So we want to know, how cheap can we get it? And if we're not paying attention or we're not taught that that's how we should look at the loan, then all we're focused on is the principal coming down. We're not looking at the interest cost of managing the loan.
Mm,
Yes, that part.
that part.
So we want to give you the red pill, Husan, and see how deep this rabbit hole goes. Or you could take the blue pill and stay in the situation we're in and never know. How's that?
No, that's really opening my mind up. I do have two loans. They're
Yes.
not consolidated.
Hmm.
Would it be smarter to pay the one that has the lower balance first and direct them to do it that way? They're both at the same interest rate.
Right. So you're talking about doing the debt snowball.
Okay.
Okay. So here's the thing about the debt snowball, it works, but it's highly inefficient.
Okay.
Okay. So I got a guy who's got a car loan. All right. And it's the smaller of the two loans between the mortgage and the house. And the interest cost on the car loan is $83. The interest cost on the mortgage is $900.
Hmm.
So should I take my money to pay off a 5-year car loan to pay it off in two and feel good about paying it off, but I'm only killing $80 payments and totally ignore the mortgage for the next 2 years where I'm paying $900 payments in interest?
Would
That's
it be
the
smarter to pay the house off?
that's the debt snowball.
Right.
So the answer to your question is I don't know, because we need to take a look at what the interest cost is on the loans and then make the right payment. Now, here's the other thing about the debt snowball. With the debt snowball, we're going to pay off the loan in its entirety before we switch over to the next loan, even though we picked the right one to begin with. Let's say we picked the right one. We focused on the one that we should, correct?
Correct.
If we have more than one loan and we know the interest cost, if we focus on that one loan, won't the interest cost soon become cheaper than my other loans?
That's true.
Then why should we keep paying that one to zero when we should have switched over to a more expensive loan as soon as this one got paid down?
I never thought of it that way. That's brilliant.
So what our computer does is says, listen, stop focusing on this one. You did a good job. We paid it down. Well, let's switch over to this one because this one's more expensive now. That way you pay the least amount of interest. And if you pay the least amount of interest, you get out of debt faster. So with the P.I.L.L method, Husan, we're not interested in paying off the loans fast. We're interested in paying off the loans cheap. Just like everything else you buy in life. What is the best cost I can get here? You know, when you're buying something and they give you the price, you says, is that the best you can do? You need to ask your student loan company the same thing. Is that the best you can do? And we're going to help you to figure all of that out, sir. And if you go to ice10k.com, click on the button that says get a savings and earnings report. We'll plug all of those numbers in, including your mortgage, including your car loans, and we're going to make sure you get out of debt the cheapest way possible. How does that sound to you, sir?
I mean, that sounds fantastic. I'll be honest. You guys are providing so much value. I'm not an endorser you guys aren't asking me to endorse, but I have listened and the value that you guys offer is just tremendous. So thank you so much.
Thank you so much, sir. We appreciate you.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.